Now, the shutdown is also impacting the housing market. I want to go ahead and bring in ABC 10's Becca Habegger, who's joining us live in studio. And Becca, this was actually a story that popped in our inbox this morning. People who need flood insurance are finding it harder and harder to get, right?
That's right. FEMA's National Flood Insurance Program is unavailable. An insurance expert tells me new policies and policy renewals are on pause during the shutdown. I spoke with him and a housing analyst about what this means for the local real estate market.
Flood insurance is not available right now through FEMA, and so that can certainly impede lending in various pockets of Sacramento where that are designated as flood zones.
Ryan Lundquist is an appraiser and housing analyst who runs the Sacramento appraisal blog. He says typically mortgage lenders require homeowners to get flood insurance if they live in a flood zone. And one popular method is FEMA's National Flood Insurance Program.
Over 5 million properties are covered under this program.
Carl Sussman is founder of the nonprofit Insurance Consumer Guidance Society, dedicated to providing the residents of California with clear, unbiased educational resources about insurance. He says people in need of new or renewed flood insurance during the federal government shutdown can check the private market.
There are private insurance companies that write flood insurance. It's not just you can only get it through the feds. And it's not necessarily more expensive. Sometimes it can be a fraction of the cost.
While flood insurance is a concern, there are other housing market issues caused by the shutdown that don't have a clear, immediate solution.
The big issue is there are some federal employees who are struggling to close on loans, whether that's a refinance or purchase, because they can't show, proof of continued income. And so, unfortunately, those people are sort of on pause until the federal shutdown gets resolved.
He says the shutdown is the latest factor fueling economic uncertainty. During the hot housing market of 2021, nearly 57% of homes in the region sold above the original list price. Now, that number is just 25%, with 63% selling below list price. And active listings are spending an average of about 80 days on the market.
I think this year in the housing market, we've seen more uncertainty about the economy. And so the current shutdown doesn't help, the psyche of buyers and sellers.
He points out mildly positive data, with 235 more homes sold in the region last month compared to September of 2024. He attributes that to slightly lower mortgage rates over the past few months.
I'm not ready to call that a trend. I think we can at least identify that, hey, when mortgage rates do go down, it does make a little bit of a difference for buyers.
I asked if the Fed lowering interest rates will impact the housing market.
When the Fed cuts rates, that's really the short-term rate. So for like credit cards and, auto loans. And so there's relief for consumers in that regard, but it doesn't necessarily mean that mortgage rates would definitively go down. In fact, today, mortgage rates actually went up a little bit.
The Insurance Consumer Guidance Society says people with existing FEMA flood insurance who have to file a claim during the shutdown should be able to still get that processed. I reached out to FEMA for the story, but did not hear back. Alex?
All right, Becca, thank you so much.